were interacting with the management of PSP projects. Time now to gear into another corporate conversation. We have the management of HFCL joining us on the show. Mr. Mahendra Nahata, the managing director, is joining us. Mr. Nahata, morning and thanks so much for your time. You know, so much news flow around HFCL right now with the new fiber optical preform plant, the plans for expansion on that front, the fundraising that you have approved. So much is happening. So let's start by talking about the plans for the plant first. Now, with this 580 crore optical fiber preform plant, how much backward integration are you going to be achieving? And on the back of that, what sort of margin uplift are we looking at over the next, let's say, 3 to 4 years?
Look, we are already quite backwardly integrated in fiber optic cable manufacturing. But preform integration was still not there. For the fiber optic cable, fiber is the main raw material. And for manufacturing fiber, preforms are the main raw material, the basic raw material. There's only one company manufactures preform in India, and they use it for their own use. And looking at our own large preform requirement, because we have a very large fiber manufacturing facility, we thought it would be good for the company to have more resilience on the supply of the raw material, more our own manufacturing, less dependency on import. Let us go do a backward integration and do fiber optic preform manufacturing, which constitutes more than 60% of the cost of the raw material of the fiber. So it's a major component. And that's why we decided to do this backward integration, which would be for roughly about 300 to 310 tons of preform, which is in fact just 1/3 of our total requirement. This is the first phase. And once this phase is done and successful, we would be probably doing more expansion also. It would save cost, get less dependency upon import and various geopolitical problems which one encounters today, as we can see now, and also improve margins also. Margin improvement could be to the tune of 5 to 6%.
All right, good to know about it. But along with that, with respect to the kind of fundraising announcement that we have seen coming from you, you flagged that fiber availability is a bit of a constraint right now, but we'll talk more on that. But given the plans to raise around 555 crores via warrants, that's one of the other latest announcements by you. How will the capital be split between optical fiber per se? Defense is something that you are looking forward to. And what's the target ROCE?
Look, first of all, let me talk about the fiber availability. Fiber availability was quite good till last year. But then all of a sudden, there has been a huge increase in demand from data centers. Data centers, after AI coming in, are buying fiber optic cable in a huge quantity all over the world. Hyperscalers are buying it in a huge quantity. As a result of that, demand of fiber optic cable has increased substantially. In fact, a couple of weeks back, we ourselves signed a contract of $1 billion from one of the major data center operator for the cable to be supplied in the next 5 years. And there is so much demand that we cannot fulfill even with our present capacity. So it is at the same time, necessary to increase the capacity of manufacturing fiber and at the same time have a less dependency on import of preform, which is a basic raw material, as I said, for manufacturing of the fiber itself. So that's why simultaneously we are increasing capacity for manufacturing fiber, in which part of the fundraising would be used. Majorly, it would be used for manufacturing of preform, and then part of it would be used for our defense business, where we would be increasing our defense business substantially into the current year, apart from using part of the fund for long-term working capital requirement.
Okay, and Mr. Nahata also talked to us about any disruption seen to the business on account of everything that's happening in Middle East. Are your supply chains being impacted? Any impact on the defense business? Or if you could just help us quantify what this impact has been, if at all?
Look, we are not impacted much because our raw material, which is preform majorly, or fiber, in some cases, if our own production falls short, does not come from Middle East. So we are not really impacted. only impact could be on PBT, which is one of the raw material, plastic raw material, which is not manufactured in India. But we have enough stock at this moment of time with us. So, maybe for next couple of months. I hope war does not continue for that long a time. So right now, I don't see any impact on our manufacturing.
All right, that's good to know. But along with that, you're also moving beyond cables into data center, interconnect and solutions. Help us understand how meaningful this segment could be for you, say in the next 3 to 4 years.
Well, that's very meaningful. Look, we are already supplying fiber optic cable to data centers. And these are not normal fiber optic cables. These are very high capacity fiber optic cables, up to 3,700 fiber in a single cable, which are not manufactured by many companies in the world. We are one of the few. Now, once the data center operators are your good customers, it is natural that we should diversify or rather increase our product range for the products which are required in data center for connectivity solutions. Apart from fiber, you need those connectivity solutions, passive connectivity solutions, which are required by data center operators. Now, for example, cables for connecting one rack to another rack, so passive connectivity equipment. So we have gone into those, and we believe that there would be good demand because the customers are same. Customers believe in our quality. That's why they are placing large orders on us. And we have already started receiving orders for those data center solutions. And ROC is also quite comfortable in those areas.
Okay, Mr. Nahata, so much more to talk about. I wish we had more time on this conversation. Maybe we'll catch up some other time. But thank you so much for taking the time out and sharing your outlook with us. And good luck for the quarters ahead.
Thank you. Thank you very
so
much.
Okay, on that note, viewers.